You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, hey, there's always people out there looking to invest your money for you, sometimes in ways that may not be your best interest. But the person you're about to hear from grew up in a middle-class family in Connecticut. He understands the mindset, the needs of people. Adam Curran is his name, and he's setting up an ETF, which we'll talk about later. Really want to just get from you, Adam, first, welcome you to the show, and then get your investment philosophy, which basically, if you're truly a professional, your philosophy kind of mirrors your philosophy towards life.
Yeah, you mentioned I grew up in a middle-class household. I don't think many people grew up quite like me. My mother was a professional clown growing up. So I answered my phone, literally, Sparkles the clown, how can I help you? And in hindsight, you know, when you're living that normal, kids are brutal. I had to grow very thick skin. I've heard every clown joke under the sun. But she was a business person, and I was answering the phone of a little business. And now I look back and I go, boy, no one's going to be able to run toe to toe with me. I've been doing this since I've been 8 years old. So it was an interesting way to grow up, but I wouldn't change a single thing. And of course, my mom and my dad's a mechanical engineer. So what do you get when you cross a mechanical engineer and a professional clown? A financial advisor.
Oh, I would have never guessed. I would say an engineer that can't do math.
Well, there's a point there. Maybe there's a lot of financial advisors that might fit that bill.
Yeah. Oh, a financial planner who can't do math. That makes sense. All right. So besides math, you got to have some point of view or a way that you look at the economy and the markets, because theoretically, at least, markets are a reflection of the economy. Might be leading indicator, might be lagging indicator, but they do reflect the economy. So what's your view of the economy?
We were talking off air, and I'm 750 miles away from Lower Manhattan in Charleston, South Carolina. And I think that's a massive advantage. I think there's an echo chamber in the major Wall Street epicenters. If you look at where the major Wall Street epicenters are, New York, Philadelphia, Chicago, San Francisco, these are communities that have completely lost touch with the challenges and the concerns that people have on Main Street kitchen tables. So our little company was built after having thousands of conversations with people at these kitchen tables. And I'll tell you, I cut my teeth to the industry as a runner on the stock exchange. I worked on an options trading desk. And then I left that desk and I worked at a hedge fund. So really high finance, incredibly sophisticated areas of Wall Street. And I thought I knew it all. I thought I was, the God's gift to Wall Street, leaving those environments. And then I got into kitchen table financial planning and actually sitting down with mom and pop consumers. And it turned out everything that I had learned in my career at these incredibly sophisticated places on Wall Street was meaningless. It was worthless to a family trying to quantify if they can put their 2-week notice in, or a husband and a wife determining if they can spend an extra $1,000 a month to get a little townhouse closer to their grandchildren. So when you ask me what's my take on the overarching economy, no doubt, if you'd like, I can kind of drivel on about GDP and if we're in a recession, if we're not in a recession, which we're in a recession. Did you catch that 60 Minutes piece last night with Joe Biden by chance, Kerry?
I don't usually watch propagandistic publications or TV shows, so The answer is no.
Point taken. You're probably better off that way. But they're asking, are we in a recession? It's pretty clear we're in a recession. If you look at all metrics that gauge economic activity, I happen to think that this isn't going to be a V-shaped recovery like we witnessed in 2008 when we printed a bunch of money and the market literally sprung board back to new highs in about a year and a half, or more recently, the coronavirus crash, where the market's down 35% in 21 trading days, and then it ends the year up 18%. I think this could look more like the dot-com bubble, because the reason we're in the mess that we're in right now is because of money printing and inflation. And if we continue to print money and throw it at this, it's going to be like throwing gasoline on a fire. So it could be a long, drawn-out revaluation of stocks and all hard assets for that matter. And I think we're only in the first or second inning of that.
I think it could be more like throwing C4 plastic explosive on the grill outside when you're getting ready to cook steaks. Not going to end well for sure. So how low can it go, the current markets here, Adam?
Well, eventually there is a lot of capital on the sidelines that I think sometimes people, the Wall Street analysts, who again are living in bright blue liberal epicenters, are still kind of hiding under the covers thinking that it's all going to go away soon. And what they would shine a light on is how much liquidity is out there, how much dry powder is out there. And there is some truth to that, right? That dry powder will eventually find a home. Right now, a lot of it's sitting on the sidelines, sitting in fixed instruments that are paying higher interest than we've seen in the last 15 years. But I think betting on the end of the world is very rarely a profitable bet. But I think if the market, 40, 50%, that's typically when the people start going all in again. So I don't think this time is different in that we've never experienced anything quite like that. Although the circumstance leading up to this, when you look at our deficit next to GDP, the only time it's ever looked like this was like at the end of World War II. And again, I think betting on the end of the world is not a good way to move forward. But I would say I'm preparing our clients that we're not out of the woods yet. I can see the market, dropping another 20% from where we currently sit.
Another 20%. And how many investors you think are prepared for that eventuality?
Not many. I mean, it's the same old story, time and time again. People get seduced by bull markets, right? And we're fickle. The American investor is very, very fickle. They don't remember the way they felt in 2008. Well, for one, 2008 was how many years back now at this point? So people forget that feeling they had, and they were in a different season of their life. Most of the people that we get to help are baby boomers, and 2008 was a real punch in the gut, but it didn't completely destroy them because they were still getting a paycheck every 2 weeks. If we experience something like that today, where we have 10,000 people per day retiring, and that demographic pimple is now in retirement, it's going to have a much, much bigger impact on the livelihoods of people than what we experienced in 2008.
Right. So this is really serious. And all these people planning for retirement could kind of be left holding the bag, huh?
I think people planning for retirement need to take a page out of their grandma's book. And if you're planning for retirement right now, your grandma was a child of the Great Depression. And I think over the years, if you're planning for retirement right now, you have been the benefactor of a tremendously strong bull market almost your entire investment life. Now, I know you'll point me to 1987 and the dot-com bubble in 2008, which were no doubt major market corrections. But when you look at the stock market's trajectory over the course of the last 30 years, you've been the benefactor of an incredibly strong market. Now might not be a bad time to take a chunk of your portfolio and put it in things that are going to be a little bit more predictable. I don't think that this particular pullback is going to springboard back up because we can't throw money at it. So what we're telling our clients to do, have a heavy emphasis on stocks that pay dividends, take a portion of your portfolio, call it 10 to 30%, and put it in things that are going to be very dependable and predictable. And then also don't turn your back on the market. The market has been a wonderful source for long-term growth and accumulation for a very long period of time. So there is an element of hang in there. The market always goes up, but losses are going to hurt you a heck of a lot more than gains are going to help you when you're in retirement or on retirement's doorstep. So make sure a portion of your portfolios and things that are going to be a little bit more dependable.
Okay. So when we're looking at it then, what about real estate? We've had quite a run up in real estate, especially post pandemic. Is that something you should still be looking at here?
I think it's funny. Charleston, I'm sure you experience the same thing where you're at. Like, we're in real estate crazy markets, right? And real estate people like to pretend that, oh yeah, the stock market's down 20%. That's why I buy real estate, and real estate's isolated from the stock market. When in reality, the stock market is simply a leading indicator to the real estate markets. Our office is right down the street from an appraiser, and they're saying that refinance applications are down like 20%. People are not going to refinance their mortgages at 6%. And nor when you look at like a $500,000 home, I mean, punch it into a mortgage calculator. That home at a 3% mortgage rate, I don't know the numbers off the top of my head, but it's probably $1,000 more per month right now. And the lion's share of humanity are doing their finances on a month by month budgetary way. Not many people have hundreds of thousands of dollars to throw down to buy your mortgage rate down. So that in and of itself is going to create a major softening in real estate markets.
Okay, but isn't it really supply and demand? So people want to live in Charleston, they want to live in Florida, even though the rest of the country's real estate markets might be going down the tube. What do you think about longer term or over the next 3 years? Which markets perform the best?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Yeah, I think if there is no asset class quite as good as real estate, even though I just said that real estate markets might soften a little bit, it's probably a good time to sit on the sidelines with dry powder to scoop up deals, because people over leveraged and went to over their. This happens. I mean, you appear to be older than me. How many times have we seen the God's gift to real estate investor guy go broke and then build up his real estate empire and then go broke again?
Yeah. Hey,
so
Donald Trump, perfect example, right?
Well, we won't get into that. That was just a portion of his overall wealth, but yes. Income producing real estate, there's no asset class quite like it. It's phenomenal, because you don't really give a rip about the home's value. All you care about is having a tenant in that home. And most real estate investors are not going to buy an income producing rental property unless they're fetching a yield of 7+%. So even if we fall into a bad recession in Florida, you're in a great state, as is South Carolina. We don't have like squatters rules where you're going to have to sit there and subsidize someone's living expenses on your dime.
Yeah, so true.
You can basically tread water, kick the can down the road. People need shelter. So you're going to continue to collect your rent and generate that phenomenal yield. So we love real estate. Don't get me wrong. I just do think when you look at you read the tea leaves, raising interest rates, people losing their jobs, higher mortgage rates, the market's bound to soften.
Mm-hmm. All right. So even in Florida, I've heard like in Palm Beach County, inventory starting to rise, and price cuts are occurring. But these markets are going to be stronger. Texas, South Carolina, in the South, they're going to be stronger than like in New York or Michigan or in colder places, in places where economic freedom is less, right?
Yeah, absolutely. There's always a supply and demand thing. Charleston's a peninsula. It's like a mile by a mile long. So people are always going to want to get a piece of that. They're going to want to live in a place that offers them a little bit of freedom and doesn't have to shovel their driveway. I'd also say wet your fingers, stick it in the air, and as soon as you start getting real estate investing advice from your dumb nephew or your bartender, that's typically, and with all due respect, I tended bar for many years. That's typically the world telling you that you should pump the brakes and not go dive in head first.
Well, that's exactly the same thing that happened with cryptos, Adam. When the saying was, when the pole dance instructor and the Uber driver are giving you crypto tips, it's time to head for the door. And that's exactly what happened there. Back in the day of Benjamin Graham, he used to say when the boot black, that's the shoe shine guy, or the elevator operator, because they used to have elevator operators on Wall Street. They weren't automatic. The elevators. Time to sell out, right?
Yeah, I just said dumb nephew and bartender instead, but yeah, they said it far more little less politically correct.
Yeah, so funny, but yeah. So this is age old, because my friend Rick Rule says, never mistake a bull market for genius.
No truer words.
Yeah. So what is Joe Sixpack and Steve Chardonnay? What are they supposed to do here?
I've never met Steve Chardonnay, but I like the analogy.
He's a friend of mine. He's a friend.
He's a good.
Yeah, we go drinking together. And guess what he drinks?
People are worried about inflation. And I would tell you that inflation, this is kind of a unique take. I don't know if inflation is a terrible thing for a retiree. And now, granted, I'm saying this from the lens of the people that I talk to on a day-by-day basis. These are people that have hundreds of thousands of dollars, millions of dollars. If you have no money saved and you're living paycheck to paycheck, or you're in the early years of your earnings life, inflation is catastrophic. But if you own assets and you have money, generally inflation is a good thing for the stock market, certainly a good thing for the real estate markets.
For sure.
So Joe Sixpack and I forget Steve Chardonnay,
yeah,
who work with my little company, have hundreds of thousands of dollars, and I'm telling them that inflation is not the worst thing. It means rates will increase. But now is a wonderful time to take some money out of those high risk assets and shift them into things that are going to be a little more predictable. Like I said, dividends, fixed instruments that are now, predictably yielding over 4% in many cases.
All right.
Not a bad place to park money and kick the can down the road a couple of years.
Well, personally, I love inflation because I've never made this much money in my life before. And because everything costs so much and it costs so much to travel and do things, I'm saving more than I've ever saved before. So this is a great thing, isn't it?
That's one way to look at it. Yeah. I thought, we're kidding about it, but our little company, I think we've got about like 20 employees here, and we pay well because we want to get the best people and we want to keep them. But I look at some of the entry level people at my company and I see what they make on a biweekly basis. And you do some napkin math and you go,
survive.
You're paying this in rent, you're paying this to fill your gas tank up. And it kills you because money can't go that far. I think a lot of the benefits that previous generations got to experience, their children and their children's children aren't getting to ride the same ride.
Like owning your own home. Well, I'll tell you, I got a Tesla, Adam, and love the car. Amazing vehicle. American exceptionalism at its most exceptional. And a couple of months ago, before they dumped out the strategic petroleum reserve, I was saving $500 a month. Now I'm down to my savings around 300. So I'm really upset that I'm not saving as much money as I was when gas prices were higher.
Well, I'm glad you mentioned the dumping out of the strategic oil reserves, because every time I see the press secretary or Joe Biden gloating about how he's lowered gas prices, it would be comparable to someone I work with blowing through all of their money and then raiding their 401k and taking $100,000 out of their 401k and then gloating about how they have lots of money again. Like we basically just completely sold our future out in order to save a little bit of money and gas when we have the greatest abundance of oil reserves right here in our nation that we're just not tapping into for pious, virtuous, greenwashing reasons.
All right. So we get to our next thing, and you've got an ETF coming out, the God Bless America ETF. Do I have that right?
Yeah, that's right. We submitted the initial prospectus to the SEC. So I have to be a little bit tight-lipped. I can't share everything until it goes effective. It's due to go effective, hopefully, by the end of this month. It's September 2022. And then our goal is to have it launched on the New York Stock Exchange sometime in October. But what we're doing is we're putting together a diversified portfolio of American companies that create jobs that are keeping their nose out of political and social activist behaviors. They're not woke. They're not making comments. They're not feeling the need to sound off on every single hot button issue that crosses the news wire. And I think the fund was born after countless conversations with hardworking people many miles away from Wall Street liberal epicenters who were saying to me, I don't want to support these businesses because the comments that they're making are trouncing on my beliefs and my values. So we created the fund specifically for my clientele who were saying this to me over and over again. They want to invest in the market. They believe the American dream is alive and well. They believe the stock market is a place that they can achieve growth with their money, but they don't want their money going into companies that are going out of their way to offend and alienate 49 to 51% of their employees, their customer base, and their shareholders.
Mm-hmm. Yeah, I couldn't agree with you more. You know, that thing, go woke or go broke, and go broke, I should say, seems to be very applicable. Hey, the ticker symbol for this ETF is going to be YALL, YALL, like y'all come again, right?
Y'all, like what's uttered out of every person's mouth here in Charleston, every conversation, it's y'all. Mm-hmm. So it's kind of a cute ticker symbol, just more proof that this thing was born here in the South. It was born here. And it's funny enough, I'm a damn Yankee. I grew up in Connecticut, went to school in Philadelphia. And, now Charleston's my home. It's where I'm going to raise my family. And my boys will have Pluff Mud in their blood and grow up shucking oysters. So, the ticker is going to be y'all. And I think there's a massive appetite for a fund like this. And if you Google it, there's already been a lot of reporters writing articles about the fund. Of course, 9 out of 10 of them kind of have a negative slant surrounding it, which doesn't surprise me at all. I'm fully prepared, ready, willing, and able to go into the lion's den and talk about the why we created the fund and the mindset behind the different stocks that we chose to make up the fund. But it's already generating a tremendous amount of buzz just because of how politically tribal we are. Oddly enough, most of the people who have come out and have had, negative takes on the fund, I would ask them to look at our fund through the same lens that they look at ESG funds, right? Because ESG funds have gotten a free ride, and there's hundreds and hundreds and hundreds of them that people who vote with their left hand can plug into. There are so few options for God-fearing, flag-waving conservative Americans to invest their money, grow their money, and feel good about where their hard-earned savings are going into. So it's really to counteract that movement, which has been so rampant as of late and misguided, quite frankly. So that's why it's been so popular, even though it hasn't even been listed yet.
All right. Well, we appreciate you coming on, Adam. And guys, watch out for that ETF, God Bless America, when it comes out. Ticker symbol YALL. We'll see what happens with this economy, whether this is the end of days economy or the beginning of amazing prosperity that could happen if things shake out the proper way. If you got a question for Adam, shoot us an email, kl@kerrylutz.com. And don't forget, go over to financialsurvivalnetwork.com, sign up for your free newsletter. Adam, really been a pleasure. We will talk to you again once the ETF is free trading and get an update from you.
Kerry, thank you so much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.